Welcome to the Crypto Clear channel, your resource for digital finance. Today we are exploring the fractional reserve banking system. In this video, we will explore how the system works, its advantages and disadvantages, who it benefits, who it does not benefit, and its effect on inflation. At its core, the fractional reserve banking system allows banks to hold only a fraction of the money that they have on deposit. This means that banks are able to lend out more money than they actually have on hand. The amount of money that banks are required to hold in reserve varies depending on the country and the regulations in place. In the United States, for example, banks are required to hold only 10% of their deposits in reserve. This means that for every $100 you deposit into your savings account, the bank can lend out $90. Therefore, the bank is only required to hold $10 of your $100 deposit in its reserves. The fractional reserve banking system has several advantages. One of the main benefits is that it allows for more money to be in circulation, which can help to stimulate economic growth. Additionally, the system allows for more flexibility in lending, as banks can lend out money even if they don't have it on hand. This can make it easier for individuals and businesses to access credit, and can help to support economic growth. However, the fractional reserve banking system also has some disadvantages. One of the main concerns is that it can lead to a buildup of debt, as banks continue to lend out more and more money. Additionally, the system can be vulnerable to runs on banks. If too many customers try to withdraw their money at the same time, the bank may not have enough cash on hand to cover all of the withdrawals, which can lead to a financial crisis. The fractional reserve banking system can benefit those who have access to credit, and can use it to invest in their businesses or homes. It can also benefit the economy as a whole by increasing the money supply and promoting economic growth. On the other hand, the fractional reserve banking system can be disadvantageous for people who are struggling financially and are unable to access credit, as well as for people who are worried about the stability of the financial system. One of the potential consequences of the fractional reserve banking system is that it can lead to higher inflation. When banks lend out more money, it can lead to an increase in the money supply, which can in turn lead to higher prices. However, it's important to note that inflation is affected by many different factors, and the relationship between the fractional reserve banking system and inflation is complex. As I mentioned earlier, the fractional reserve banking system works by allowing banks to hold a fraction of their deposits in reserve, while lending out the rest. This means that banks can create new money by issuing loans, and as a result, the money supply in an economy can grow rapidly. It's also worth noting that this system benefits the banks rather than the general public. It's a way for banks to increase their profits by issuing more loans and collecting more interest. It's also a way for the bank to be less responsible for their depositors' money, which can put depositors at risk. In conclusion, the fractional reserve banking system has its advantages and disadvantages. It allows for increased access to credit and financing, but it can also lead to inflation and financial instability. It's important to weigh the pros and cons and consider the potential impact on the economy before implementing this system. Thanks for watching the Crypto Clear channel. If you liked our content, please consider giving us a like, subscribing, and clicking on that notification bell so you can be informed when a new video is released. Thanks again and take care.